time came when the ticker tape in the broker's office told a new story. It was panic. 16.5 million shares of stock sold in a single day.
Ladies and gentlemen, welcome back to Stock Dirty to Me, the number one podcast for beginner investors. I am, of course, your podcast mogul Phil Better, but that's not important who I am. I'm here just to talk about these two experts above me. We got Lloyd Ross, the money millionaire mentor, and Tony Summit, stock bro.
He's the expert. He's the expert.
You have a degree. You
have
a degree, sir.
He's the millionaire. He's the millionaire here.
I'm gonna start making some money in stocks, so people aren't gonna believe me.
Yeah. Well, I just bought more Baba, so that's what I did today.
All right, are we gonna talk about Baba again? I think we should give the viewers.
I think we did that last time.
We did enough of Baba.
Put off there.
It is entertaining, but we'll give.
I'll tell you one thing that is funny though. I'll tell you this is funny, entertaining. They arrested a guy in China with the last name Ma, and they thought it was Jack Ma. And the stock dove like fucking like 5%. Boom. Anyway, it was a mistake. Oh shit, man, so funny. You couldn't write about it.
Oh my god, that's insane. Poor dude. Poor company. It's taking hit after hit.
Everywhere. Blah. Shit. Anyway, we'll see what happens. But the stock market's down drastically because of interest rate rises.
Fuck.
Yeah. Fun fact. Today was the largest single day drop. It actually did bounce back up, but at one point the NASDAQ was down 6%. And the S&P was down about 4.5%. And that would have been the largest drop in one day since 2020 of March. In March 2020, we had 2 days in the market where the S&P dropped 9%, and then another day it dropped 7%. So those were the biggest drops since for a decade previous to that. So yeah, happy Cinco de Mayo, everybody.
Oh yes, Cinco de Mayo. Oh my god, I totally forgot about that. Oh yeah, that's huge.
Happy what?
Cinco de Mayo.
Oh, you don't celebrate Cinco de Mayo in Australia, do you?
What the hell is that?
Oh my god.
Shannon's
oh my god.
I'm not looking. No one wants to look at their portfolio. But Cinco de Mayo is it's the 5th of May. It's a celebration in Mexico that
victory over France.
Yeah,
really?
Victory over France. Yeah,
never knew that battle. There you go.
Yeah, well, it's not really important to Australia at all because you guys are like it's on the other side of the world.
I'm going to Mexico on Wednesday, so it's good to have a brush up on history.
Yeah, it's only it's kind of like Independence Day for Mexico.
Cool. There you go.
Yeah.
Thank you for educating me.
Yeah, we celebrate it in the United States more than probably Mexico.
Yeah, makes sense.
It's a big thing here. It's a big deal here. Yeah.
Yeah. It's like the Irish. It's like
St. Patrick's Day is celebrated more. We're getting some love from the comments. I always love to see people. Let us know if you're here with hashtag live. Ashley Cowley's in the house. Thank you very much for being here. Hashtag live. Hashtag replay if you're watching the replay. I know we have a replay gang, so hashtag replay gang. I'm shouting you guys out. We got some comments because I was talking about something about the podcast being dropped. So yes, we got Sabrina, always a long time viewer. Thank you very much, Sabrina, for showing up all the way from Louisiana. So thank you very much for that. How's the weather in Louisiana? Let us know how you doing in your portfolio. If you looked at your portfolio or not. Let us know in the comments. We always love to talk to you guys, hear you about that. But guys, we've been talking about rates rising, and Kathy Woods decides, our favorite person, decides to poke her head out and urges caution. So she tweeted this on the 2nd of April. I think this is the one we're talking about, right?
Kathy Woods was totally against the Federal Reserve raising interest rates, and she said would be a really stupid idea for the Federal Reserve to raise interest rates. And it's gonna crash the market. Well, of course, it's a horrible
crash
idea.
her portfolio.
Yeah.
Oh, big time.
Didn't crash any energy ETFs. They all went fucking up.
It is going to destroy her portfolio because I was talking to one of my buddies at work today, and he's big into stocks too. He's been following stocks for like a decade.
Is he a follower of the show?
Yeah, he's more of a trader, but he's very knowledgeable. He understands everything that's going on. And him and I were talking for years about the ARK ETF. And I remember back in 2020, I'm like, this is the stupidest ETF. When you look at all the companies in it, a lot of it is just like Roku, Teladoc. It's a lot of companies that aren't really solid companies that benefited greatly from the pandemic. And once we're out of the pandemic where people aren't staying home locked up anymore, those stocks have all dived like 50-60%. And Robinhood, she had a lot of money in Robinhood, a lot of money in Coinbase, a lot of money in these stocks that have just absolutely tanked.
She's a trend. She just buys fad companies.
She's the exact opposite of Warren Buffett.
Oh yeah,
the exact opposite.
Yeah. Good way to explain that. Actually,
she doesn't look at any fundamentals of anything. It's all about disruptive tech, where it's going to be the future. Who cares how much money they make? And that's what she does.
It's fascinating. This great quote from Warren Buffett probably sews up a really good lesson. I read it last night. Is this what it takes to be good at picking stocks? Ready? He says, we see change. So Kathy Wood's going for all these high-tech, changing, innovative, disruptive, like what Tony said. He says, we see change as the enemy of investments. So we look for the absence of change. We don't like to lose money. Capitalism is pretty brutal. We look for mundane products that everyone needs. So when people say, oh, like this new tech's coming out, I want to get this and this, I'm like, it's changing too fast. You want to buy companies like Wrigley's, Gillette, flipping shit. Coca-Cola. It ain't going to change. And that allows you to stay in it for 30 years without worrying, and you just grow your capital over time.
And by the way, Warren Buffett's Berkshire Hathaway is actually one of the best assets this year. And I think it's actually positive.
Yeah.
So
the market.
The thing with Kathy Woods, I mean, the last 2 years, it's been nothing but mistakes. Like, she recently just sold 90% of her Twitter holdings before the Elon Musk buyout. So lost a ton of money on that.
Oh my God.
I mean, every move she's made in the past year has been absolutely horrible for investors.
My question is, how did she get so famous? Like, what did she do?
A rising tide lifts all boats, Phil.
Oh, okay.
I think she was a hedge fund manager. And
people thinking Kathy Woods is a little crazy.
The ARK ETF started in 2010, I think, or 2013, I think it was. And we've had a 10 to 12 year bull run where everything is up. Like, everything has been up the past decade. And it's funny because the last 5 years, before 2021, the ARK ETF was up like 300%. It was up an insane amount. It was up a lot. And it was actually beating QQQ, which is the NASDAQ. Well, since now, from today to 2013, QQQ is now beating ARK by like 50-something% over that same period. So it's one of those things where companies can beat the S&P 500 and the market indexes in short periods, like 5, maybe even a 10-year period. But over the long run, eventually those indexes, they eventually beat these shitty, like speculative ETFs or speculative stocks. It's just a matter of time.
She was just a byproduct of cheap money. Because rates have gone down since 2013, since she started. She has not even seen she wouldn't have seen a cycle in her ARK fund, and she was just riding the wave. And all the retail investors who were new just followed that shit because it was popular and it was techie and it was changey. It was just amazing. So she had a flood of new money coming in. It was unsustainable. and she's now heading back to where she belongs.
You know what's funny? I think we looked at this before. If you pulled up ARR or ARKK is her
Yeah, I have it right here.
flagship fund.
It's
We looked at this
ARKK.
before, I remember, and I showed you guys, like, if you look at that fund before 2020, it's pretty flat. It's going up very slowly, but then 2020, it's like a fucking rocket ship.
Yeah, it's just COVID money.
Yeah, this is all COVID money, all the way to
it's all
15th.
quantitative easing, and you know what?
Yeah.
All of that is. I'm going to tell you, it's one company was Tesla. She bought a huge stake in Tesla before the jump, and Tesla went up like 400% in that time frame, and it just lifted ARK by itself, single-handedly.
You listen to interviews of her, and as she talks, she has no. It's like she doesn't understand what she's doing. That's what I feel. I've listened to interviews. She just talks she just talks in cliche. It doesn't mean anything. It's just
the other thing that sunk her was the Bitcoin investment. She invested a lot of money into Coinbase and Bitcoin, like MicroStrategies company that Michael Saylor, you know about Michael Saylor, I'm sure, right, Lloyd?
Yeah, he's got the biggest. Isn't he got the biggest margin position in Bitcoin at the moment?
The biggest. His stock is essentially a Bitcoin spot ETF. That's essentially, and he's lost a ton of that.
I've heard if it drops to 21,000, he just gets obliterated. If it falls to 21,
margin call.
Yeah. And it will. Like Bitcoin's going to 5,000. You look
that
at
guy though. I've heard him talk a lot. I've listened to a couple like hours of him speaking, and he is very convincing. Like he's a very good speaker, very articulate, and he knows what he's talking about, and he's very good at analogies. So he could trick like 9 out of 10 people to go buy Bitcoin immediately.
Yeah, definitely. Same as what's his name that owns Square? What's his name that used to own Twitter?
Dorsey.
Yeah, Jack Dorsey. Same thing.
Yeah.
If you look at the pattern of Bitcoin now, I think it's hit a head and shoulders, a massive head and shoulders pattern. I'm not a technical guy, but I understand that it's hit a massive head and shoulders pattern. If it goes up one more time, it's just going to plummet to 5,000. It's finished. And I think rates are just going to kill it. See this? See how it's the second shoulder now? So if you're the first one, first shoulder, yep. Next one up, head, head, and then the next shoulder is coming. See down here on the right? And once that hits up and goes down, we're going back down to 5,000.
Yeah, because it's going to get another little bounce. I think there's another bounce, and then it's because if it look, we got a bounce, drop, big bounce, drop, bounce. But yeah, it's.
I feel like I'm so confused about cryptocurrencies. I understand both arguments about it being worthless. I understand the other side's arguments, and I've listened to a lot of it. I've listened to dozens of hours of people talk about Bitcoin for and against. I've listened to debates online. I listened to Peter Schiff, debating people about gold versus Bitcoin.
Yeah.
They all make excellent arguments, and I've been convinced on both sides. And it's just go ahead.
Well, there's two parts to it, Tony. Like you're convinced of, like the people are getting confused. They're getting confused because they're getting confused with the ideology and functionality of Bitcoin or blockchain as a way to have frictionless movement of money. And they're getting confused with that with a good investment. They're completely two different things. It's like saying, like if you were going to buy a house in Las Vegas and that house is going to give you $50,000 a year income, would you buy it for $500 million?
No, that's
stupid. Like, why? Great house, shit investment. It's the quality and the quality of the shelter that it provides has got nothing to do with whether it's a good investment or not. Some of the best companies in the world are shitty investments, right? And some of the worst companies in the world are the best investments.
It's true.
It's all got to do with the relativeness of where is your capital best placed to get predictable returns into the future. And there's nothing predictable about this. It's just this ideology of a great technology that's getting confused by people in terms of investing. So I think the whole technology is going to be around forever. It's going to grow. It's going to be amazing. It's going to be functional.
It's just too early.
Utility. It's not even that. It's wonderful. I'm all for it. I'm even for frictionless exchange of currencies. I'll get all that. but it's a shit investment. That's what it comes down to.
I think it's more of people trying to make it a new currency rather than just
totally.
what it is. What it is a speculative asset.
Well, they're going to get confused with the story they're spinning is ideology of movement of currency, which is great, right? But what they're actually saying in the back door is, I'm going to make money out of this.
Yeah.
And it's like, they're full of shit. They're just
hypocrites. The problem with every single altcoin has this problem where Bitcoin there's no CEO of Bitcoin, where every single altcoin you see pushed, and I've listened to dozens of interviews of these people pushing the companies pushing these altcoins, every single one of them controls the supply of that coin, and they can dictate if it's going to go up or down. They can give free coins away. They can run marketing. They can do all kinds of things to manipulate the coins. And that's what is very scary about investing in any type of altcoin, to me personally. You know what I'm saying?
Yeah. I'll tell you what I think is good when it comes to, like Ethereum contracts and the technology, is that you invest in companies that use the technology. So, like, for example, we own this travel company, and it's developing blockchain technology with contracts with its largest suppliers in hotel market to develop a technology that allows it to create a competitive advantage as a business. And I think those are the opportunities that pop up. Like what happened with the internet, you didn't invest in the internet, you invested in Amazon or Google, like companies that are generating a business model off the technology, not the technology itself. And I think that's where people are kind of getting a bit confused. They're getting confused with NFTs because they're buying the actual art. They're not buying the bit. Like, I prefer to own Christie's as a business than the art and stuff that's coming out of there because it's just too hard to predict. Whereas you can see Christie's has got a predictable business model, right? It's
by the NFT exchange rather than
that's
an
right.
NFT.
Correct. That's right. And that's what Gary Vaynerchuk did, right? I think, didn't he?
That's what Coinbase
created.
That's why
he created his own.
Yeah,
he has NFTs, but I think he also created his own exchange.
Yeah, good both. Yeah, but
that's the problem is those are fucking pushed by these influencers. You know,
I know. Listen.
Well, there are some being brought to court. So regarding the NFTs, there are. I saw a few weeks ago on. I was watching Phil DeFranco. There is a court case.
Whenever you need sorry, you go, Phil.
Well, I was going to say they're being brought to court regarding the pump and dump NFTs and Bitcoins and shit like that.
Yeah. Whenever you see an influencer getting pulled in to sell something, it's fucking game. It's a hustle.
Yeah. I'm not. Anytime I see something that's like new age technology that I don't understand being pushed.
Whenever Matt Damon gets on TV and talks about anything that's outside acting, you fucking just run away 100 miles an hour. This is dumb. Like, there's some real basic shit you need to do to be good at investing. And following the crowd of Snoop Dogg into financial stuff is fucking stupid. Mm-hmm. If you do that and you lose money, you're sucked in. They're just silly. I would just be following the big hitters like Warren Buffett and those guys who just been around.
The guys who do it quietly. The guys who do it quietly.
Yeah, compound quietly, 100%.
Yeah, I've really shifted my strategy to only buying assets that produce income.
Yeah.
If it doesn't produce any income, this way, if the market's down, I still have some type of passive income source, even though my stock is losing value. You know,
Tony, you should load up on some more Apple, man. Warren's just buying it still. He just bought some in the last quarter.
I was looking at Apple. I was thinking about adding it to my portfolio.
I bought $1,000 of Blue today when it was down 5% almost.
And then I bought,
it was down a lot. It was down like 370 something. And then I bought $1,000 of SCHD. I was gonna put in 5,000 today, but I want to wait and see.
Yeah, it could fall further.
It's gonna
with
fall
the rates.
further.
Yeah, when Powell can
every month.
When there's 8 interest rate rises, this is just what's going to bring all these high growth, risky, speculative assets down. It's just going to run. And
Apple's really going to fall farther. Probably.
Yeah, hopefully it does.
I hope so.
If it does, I'm picking up some. I'm just.
I think if it goes to 100 a share, That's when
Oh,
I'm like,
It's
if it
100
gets to
a share.
100,
Just
I don't
throwing
think it's
money
going
at
to
it.
lose 50%. I don't think it's going to lose 50%.
well, isn't it only like 140 a share?
Hold on, let me pull it up.
159, 150,
Is it?
155. Yeah.
I'm bringing
But-
up. Hold on.
I think it's 155.
Well, the problem
150.
is I already own Apple for 102 a share.
Yeah, it's amazing. But I don't know if it's going to fall out.
It's
but even though-
150 here. Hold on, it's on screen.
156.
156. Let's
I
see.
could have
max.
sworn a couple days ago it was down to like 140.
Well, Warren
I don't
Buffett
Let's
know.
do the
was
last
on it.
5 days. Ooh, it's down 3% in the last 5 days. The last month, it's down 8%.
I think people
You
have
know,
to understand. You go.
I'm not very big on buying individual stocks anymore. I just don't.
Yeah,
And like
that's smart.
Apple's obviously, I don't know. I just feel much more
Just go
comfortable.
VU, man. Just VU it. Just VU the rest
I mean,
of your
Apple's
life.
in there. Apple's the biggest holding in VU. You
It
know,
is. It
It's
is by a mile. I've got someone here. They said in the question, "I'm confused to why the stock market keeps going down. Who is selling? Why is the government? What's supplying it?" Do you know what's interesting? Is people don't get this. The market has been flooded with cheap borrowed money and printed
government
money.
bonds,
Mhm.
government treasury. Yeah,
Everyone has to understand this. Like, they go, what does that mean? Well, here's what it means. It means the earnings you're seeing from the companies like Google, Apple, Amazon, that's coming from customers. The customers are getting their money from various forms of either welfare, income from
stimulus.
jobs,
Yeah,
stimulus, and those companies are getting that too. So these earnings are fake. I just
Yeah,
want to
'cause
make that
it's-
clear. They're not real. It's a byproduct of a symptom of cheap money for 13 years.
I'm going to tell you how you know the economy. People are starting to be fearful. This is a key sign, and everybody can see this. And a lot of people here will understand. If you live with a woman, a wife, girlfriend, whatever, and all of a sudden Amazon packages aren't coming every week, that's when you know right off the
But
bat.
Amazon's earnings have dropped, and they've got smashed.
Well, yeah.
They got hammered.
I was talking to a couple of friends, like, yeah, my girlfriend, I haven't seen any Amazon packages coming in. People are starting to tighten up their wallets, man. And
Yeah, man.
that's the first thing. 80% of consumers in the United States are women. 80%. So when they stop buying things and they start feeling it, that's when you know, like, okay, we're headed for a recession.
Well, check it out. Ready? Google. Consumers don't buy Amazon. Amazon pays. People get laid off. They don't. Then businesses don't spend as much on Google ads, so that falls in the earnings. And you start to see these earnings have come from a loose economy, right? But here's the thing. I think one of the businesses that is impossible to break because of just the sheer, you would sell your left leg to own one of these phones.
Yeah.
It's so, because my wife's phone, it broke, it went into meltdown and she couldn't turn it on. Now, for 2 days, she didn't have a phone. Now, your whole life goes on pause when this sucker doesn't work. And if you couldn't fix it, you get your ass down and you're paying $2,000 for one of these bad boys. You would sell your soul to get one, right?
Oh, yeah.
Because so I think one of the few businesses that can do well in any period of time is Apple. That's why Warren owns it as the biggest holding. It's just ridiculous. But the other company he's bought is his fourth largest position now. Think about that. He just bought it. He bought it a while back and he added to it. Is another commodity we can't do without, even though we want to, even though we all think that we're going to be all in sunshine and rainbows and happiness world.
Oil.
Living on green energy. It's fucking oil. It's in everything. It's in everything. Oil in this, oil in your computer, oil here.
Plastics, electronics, everything.
And oil is like, it's gone up in value because of the Russian issue and so forth and the supply. But Warren's fourth biggest holding is Chevron. Kicked ass last quarter. It's just fucking, it'll print money for the next probably decade, right? I don't think we can move away from oil as far as what people think. I think that's naive.
And someone asked why is there market sell-offs now? Well, for the first time since 2020, the US GDP shrank 1.4%. That was the first time it's happened in 2 years. So people are starting to see, and when the GDP shrinks, that means that people are buying less, people are spending less money, and then that means jobs are going to start laying people off because they don't have people buying their products. They don't need as many people. And I think we're in the very beginning right now. It's going to get worse. It's
Oh
going to
yeah.
get worse.
Well, you know what? It's a situation because we've got high inflation that's entrenched from all these other things happening at once. The only way to get rid of that is to raise rates and cool the economy. But when that happens, the economy falls and goes into recession. And they think that if they raise rates fast enough, they can drop them again to revitalize it. And we play this game of pull this lever, do this, pull that lever, do this. So there's going to be a choppy experience for probably 5 years.
I don't think people understand, because I talked to some people. I was talking to my mom about this and raising rates. They don't really understand what raising rates means and like how this is connected to everything. Well, the Federal Reserve sets like a standard interest rate for other banks to loan money out.
Yeah.
And when that interest rate goes up, banks follow that standard. And now this means if you want to buy a house, the mortgage rates are up. If you want a car, the car rates are up. Credit card rates are up. Now, a lot of people are in fixed rates, so it's not going to change people. If you already have a mortgage with a fixed rate or a car with a fixed rate, whatever, it could affect your credit card. But it's for new buyers. It's for new consumers that want to start buying a house, or they want to buy a car, they want to take out a loan. It's going to be more and more expensive for them to do that. So even though housing prices could come down, now it's going to be more expensive to get a loan, and your rate's going to be higher. So it kind of like cancels it out.
Yeah. So in your mind, so this is what I think about as an investor in my mind. You got to be, it's like a game of chess. You got to be 2 or 3 moves ahead, and you got to watch the trends of what's happening, and you got to be in front of it. And that's why they call Warren Buffett the Oracle of Omaha, because he can see things before they happen. And you have to just be forward thinking. So like as Tony said, rates are going up. So how do you position your capital to grow in that environment? And the answer to that question is usually energy, commodities, and financial businesses. Because when rates go up at banks, they have a wider net interest margin spread, and they can lend out and they earn a lot more money on their deposits at bank, which is a lot of. So I'm positioned in banks, and of course, I'd love to be positioned in energy like oil. I think Chevron's a good bet, but I think I missed it. But they're the types of decisions you've got to make as an investor as to what's the next cycle going to look like. You know what I mean?
And to your point, companies with a lot of debt that have huge amount of loans that require a lot of capital, like all the companies in the NASDAQ, they're getting hammered. They're getting absolutely hammered.
There's a lot of bankruptcies, delinquencies, a lot of housing. Like a lot of people are taking massive mortgages out on their housing. Now, in the States, you can fix that rate for 30 years, I think. But in Australia, you can only fix it for 4 years. So in 4 years' time or 3 years' time, we're going to have a big flip where people are going to remortgage and go up on these big mortgages they just got, and they're going to get towed up.
I'll say this. QQQ is down like 24% on the year. Like
that's a big drop. That's a big
drop.
Man.
That's a big drop. Yeah. And if I was feeling a little bullish, I might throw like 10 grand in there because like all those companies are going to come back. It's just a matter of when.
Yeah.
Did you see 2000? Oh, go ahead.
I tell you what's interesting. I watch the Berkshire Hathaway shareholder meeting. I watch it every year, and there's some good
Me
lessons
too,
out of that. Yeah. And so some of the things that came out of that were I love this this almost arbitrage opportunity with Activision Blizzard and the buyout from Microsoft. So Microsoft confirmed to buy it out for $94 a share. And
there was some insider stuff there for sure.
It's probably going to pass, right?
There was some insider stuff.
Yeah, it seemed to be. Warren's offside of buys it at 50. Warren's loading up now at 70 something, whatever. It's almost a riskless 18% profit from today as the deal settles early next year. So if you want to make almost a riskless profit of 18%, which is fucking amazing, then Activision Blizzard is probably the one thing. It looks to be like a pretty good bet. Don't go out and buy it based on that. I'm not going to give you any financial advice, but I'm just saying it was an interesting to see that. A real arbitrage opportunity that Warren Buffett's buying in real time that's still cheap, and you can still buy it today. This is awesome. It's just so good to see something like that pop up, a workout or an interesting opportunity like that. That's usually not what he does.
To me, this is a big play for Microsoft to position himself for the battle of the metaverse.
Yeah, it's
future of the
the
internet.
Yeah. You know what's really interesting? Hey, Microsoft, see, the way Microsoft approaches and buys whole companies is how we should be buying stocks. They're positioning their capital for the next wave, right?
By the way, they bought Activision in cash. That's a 100% cash deal, $68 billion in cash. That just shows you how financially strong Microsoft is, that they can just spend $68 billion in cash and be like, oh, okay, no problem. No problem.
insane.
Yep. So those are the companies that I would like to own, is companies like that, rather than companies that are dependent on the pandemic and quantitative easing.
This is why Microsoft has been around and in the S&P 500, the top 10 for the last 20 years, 30 years.
I have another thing to add to what Lloyd said about what you can do, because I've noticed all of this year, my portfolio hasn't really dropped that much because I have really heavy positions in two dividend ETFs, SCHD and VYM, and those are both pretty flat on the year. They're doing really, like, they haven't had much volatility. Excuse me, they haven't had much volatility at all this year. They're crushing the S&P and QQQ.
Yeah, and I think that's what happened to Berkshire. Like, if Berkshire's just positioned itself for this next cycle, look at all the businesses it owns. Like, you can buy Berkshire and do really well for the next probably 5 or 10 years. I think it'll outperform the market in the next few years.
I thought about getting some Berkshire B, but I probably should have did it last year. That was probably the time to do it.
I used to own heaps, but sadly sold it to get a dividend income for various reasons.
That's my thing. I can't justify holding stocks that don't pay me dividends anymore.
So yeah, Marcus wondering if Lloyd, you loaded up on Baba, and if Tony, you did load up on your ETF today's dip.
I wouldn't call it loading up, but yeah.
I'll tell you why I haven't. Is when you have a large portfolio, large, I don't think it's that large, but it's significant for what the income we make, I think. And to move the dial, to make a dent in the portfolio's growth, you can't just chuck $1,000 here and 10,000 here. Yeah. So, and I think if you look at Warren Buffett, the way he approaches his portfolio, it's the same process, just with the bigger numbers. He saved up basically 60 billion in cash, and he just unloaded 40 billion last quarter buying. So he kind of does the same thing at a bigger scale. So for me, we would save up probably $200,000 or $250,000 and wait, and then execute like $150,000 position or $200,000 position in one go into one great business that we understand that we're going to hold for a long time, or either keep waiting or buy the index. But that's the type of swing you have to make to move a $1.3 million portfolio. You just can't do it on tens of thousands of dollars. Does that make sense?
It makes 100% sense. I almost never buy anything. I just dollar cost average every week. Yeah. The only time I buy like 1,000 here, 2,000 here is when like VU dropped 5% today. So I was
that's smart.
So I'm like, why would I not put more
that's
money
intelligent dollar cost averaging. That's intelligent.
By the way, I'm still up. Even with the drop, I'm still up. I think 20%.
If I was starting out again, this is what I did. I did what Tony is doing. Like, every time I get like $2,000-3,000, I'd wait for the market to dip a bit, and I'd jump it into an index, or I'd put it into Berkshire. Every time I made 10 grand, I was to buy Berkshire. I did that for like 2 or 3 years, I think. Boom, 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 boom. And that's how you really start out. But eventually, when you got a bigger portfolio and you got a business that produces cash, you do have to kind of wait for a couple of years, 2 or 3 years before you have enough to make a bet. Plus, great opportunities don't come around all that often that you want to really buy. And this great quote yesterday from who said it? I wrote it down, but it was you really do make your money on the purchase, and you want to make sure that it's such an easy decision that even if you're wrong about the future, you still make money. And
that's how I buy things. I only buy stuff that I feel like so confident about now. When I first started investing, I bought so much stupid stuff. Like I didn't even know what I didn't understand half the shit I was buying. And the things I was buying, like I was like, oh,
Yeah,
Ford, that's a good, like I would buy these things, but
yeah.
it's like now I look back, I'm like, why did I spend so much time thinking about what stocks to buy? Like now I spend no
Yeah.
time thinking about stocks.
I-
The only time I think about it is if I say like, oh shit, Apple's down 15%. That's
Yeah.
like the only things I look at.
That's how you should do it. I made a massive mistake in 2018, repatriated all that money from Berkshire and Bank of America and GM that I'd made money from into Australian dollars, made a good amount, and I put it in the wrong things just because I was too lazy. And I reckon it cost me like $200,000 or $300,000. Pretty stupid. Like, because I was going for an income strategy for various reasons for business, so I could transition out of job and scale. That's fine, but if I had of, like what you said, Tony, like I wasn't really. I should have done. I could
You
have done
probably
better.
you were overthinking, right?
I just didn't even think, I think, and that was
Yeah.
worse. So it's like, well, I just want the lazy, give me the dividend, fully franked, tax-free income, put it in a couple of banks. And there was a banking royal commission in the country. I mean, how flipping dumb is it? And it just went sideways for 3 years, which is worse because Apple just teared up. And so I
Yeah.
had to just been a bit more intelligent because there are two mistakes you make with investing. There's a mistake of doing the wrong thing. So you're commissioning, like actually taking action and being wrong. Okay? But there's also a mistake of not
Holding
doing
bad investments too long.
just not doing anything that you should do. Like, so there's an opportunity cost to make, because when you say yes to one investment, you say no to another.
Yeah,
Right?
100%. There's only so much money to put
Yeah.
into stocks. Like, I
Yeah.
mean, most of us only have so much money to invest. So you got to invest in the best thing you possibly can.
Yeah. If you want to beat the market, definitely. But if you just want to go VU and just dollar cost, you just do well.
VU is my largest position, and I'm just going to keep doing that. Like, I
You
know
what?
I can make more money with all of it in one stock, but then I have to think about it. Then I have to worry about it. You know?
If I look back to 2008 when I started investing, 2009, if I had just done that of VU, because the index funds are only kind of popular then, only just here in Australia, and if I had just done that, I'd be way richer.
Instead of trying to pick,
Warren Buffett comes into Charlie Rose, has that conversation with him before the Berkshire meeting, and he says, "I've told people this so many times. Smart ones take it on board. Dumb one, he didn't say dumb one, but most don't. Just
every
buy
year he says it.
The index fund. He didn't say buy any. He says the S&P 500. What the hell is wrong with us? Maybe not us. Maybe just what's wrong with me? I mean, maybe Tony and Phil, if you got VU.
I think I learned. VU is.
I learned right away. I just jumped straight into VU. I just was like money in VU.
I am a little bit on the dividend. Like I probably have, to be honest, I probably have too much money into 2 dividend ETFs that I could just put it all into VU, and it would probably be better in the long run.
Yeah.
But I think I'm trying to do kind of what you were doing, where I want to have some extra income to supplement things. And I just don't know if I'm still like debating if it's the right thing to do. Right now, I feel it is because VU is getting destroyed and these are like kind of flat. But what's your take?
Bubba cost us $30,000 in income, in dividend income, tax free.
That you mean in this time that you've had?
I would have made had I just put into something.
Well, on top of all the losses that you've had already with it.
Well,
right?
on top of the losses, yeah. So I would say 30 plus 170. So it's 200,000 backwards. Now it's going to be fine. I'm going to dominate, but I think it's the income loss. Like, so if you look at, it's such a wonderful place to be in when you have cash flow coming into your household. Like and especially you have no debt, so you can be very, very, very powerful in times where the market shits itself. Because especially if you're getting, JP Morgan. I'll give. If I was going to buy a stock to position myself right now, I've been looking at it. JP Morgan looks to be juicy, and HSBC, both those banks. But JP Morgan is the best banking franchise in the world. It's paying a 3.5% dividend. That's a good dividend stock, and it's selling at 8-9 times earnings. Run by the best banker in history.
Hold on, let me pull it up.
JP Morgan's in this is why I love SCHD ETF. I honestly think SCHD ETF is almost historically on par with VU and pays double the dividend. That's why I feel like I want to hold on to it. I don't know.
Can you hold it forever? Will it outperform VU forever?
I don't think so, but maybe because of the dividends, because of the double the dividend yield, and it's still so it's produced about I think it's about 10% less than VU over 5 years, but it's also pays like a 3% dividend.
That's not too bad. Only 10%. That's not too bad because it gives you security and safety.
SCHD. Last time I looked, I haven't looked in a while, but so SCHD over the last 5 years is at 72.5% return, and VU over the last 5 years is at 73% return.
See, there you go. If I had to put it in there, I'd be up an extra $360,000. 70% in 5 years is tremendous.
But
very good.
So that's what I mean. This ETF, even before this, 2 years before this, when I was looking at it, from 2015 to 2020, it was like 10-15% less than VU, but it pays more than double the dividend, and it's full of a bunch of blue chip stocks. So I don't know. I'm conflicted. I don't know if I should just keep dumping money into this because, and the expense ratio is the same as VU's. It's almost, to me, it's like a no-brainer ETF fund, but I also don't know if I'm better off literally putting all of my money into VU and just doing that,
Yeah. The problem occurs, I think you're good with this SCHD, is it called? I think you're good with that. The reason why I think that works is because it's not sector specific, which means you don't have to second guess the next cycle and sell and engage tax losses. Because people don't realize this, but when you sell, you have a 15% minimum tax loss. That's huge. So, like, for example, if you don't have to ever sell this, you're way in front. So I think if you buy an ETF, buy one that you never have to sell, because it's when you're trying to trade ETFs to run with cycles that you end up taking losses in tax, and it ends up wiping away your gains. It's fucking dumb.
Yeah, I've already made over $1,000 in dividends on this. So, and
but are you reinvesting the dividends back into SCHD?
Oh yeah. So I'm not taking any dividends.
You're actually manufacturing a VU by doing that. Do you understand?
Yeah.
Like,
I'm not
VU's
taking
already
any
doing that.
income.
VU's already doing that for you because it's actually just redeploying it at a higher rate anyway. And so I think the benefit of your SCHD is the fact that it's giving you flexibility and options with the cash, right?
Yeah, I reinvest all the dividends, and I've been doing that for years because I don't need it yet. The thought is, maybe 10, 15, 20 years from now, I could have, thousands of dollars of dividends that literally will pay like car insurance, cell phone, everything.
So I think you're better off, if that's the case, to pump in your VU for 30 years and then sell it all and then chuck it into SCHD.
Yeah, so I have more income. That's the other thing I was thinking. Yep.
It's pretty good.
That might be the advice. It might be the best option.
That's not financial advice. That's a perspective.
It's perspective, yes.
This is a personal perspective from
now. I think
if you had the situation Tony was in, that's what you would do.
Yeah. No, and that's smart. That is smart. I just like the idea of having. I hate to say diversification because it's so it's so cliche. But
well, it's not that. It's just that you're completely diversified in VU already, and it's just.
I know, but it's kind of playing out this year where it's like VU's getting hammered, and these two ETF funds are literally keeping my portfolios stable and paying me. It's like
You know what I love about the fact that you own VU is that you own Baba.
Yeah. Wait a minute, is Baba in VU?
Yeah.
Is it? Are you sure?
Fuck yeah. Man, it's a $200 billion company on the exchange. I'll be shocked.
Yeah, but
if
I
it's
thought
not.
it was only American companies.
Is it? I don't think so. I think it's the biggest in the US stock market. I could
Hold
be
on,
wrong.
hold on.
I think
Vanguard
Baba's
Prime Cap
in-
Fund, Dodge & Co. International Fund, Crane Share Trust ETF, and T. Rowe Price Science and Technology, and T. Rowe Price Blue Chip Growth.
Baba's not in VU. Baba's not in VU.
Yeah.
Let me double check that.
Because Baba's not an American company. VU is only the S&P is only the top 500 American companies.
I thought it was the top on the exchange because it mimics the S&P 500.
I thought it was the top 500 largest 500 American.
Let's check. Let's just
based
check.
I could,
Right.
yeah.
BBY, back. Oh, BKR, BBRK. I can't see it.
I think Baba might be in VTI.
Maybe.
I don't
It's
think
not in
so.
there. It's not in there. I can't see
It's
it.
not in VU. It's not in VU. Because it's not an American-based company. VU is only an American-based company.
That means it's not really a reflection of the index.
Well, the S&P 500 is the 500 largest American companies.
Yeah, but the S&P 500 index is
It's the largest 500 American companies.
why? What? But isn't it on the exchange? Isn't it listed?
It's on the. Well, it draws from all of the American exchanges, but it only adds American-based companies.
So it's a bit of a skewed index. It's not really the top 500 companies in the stock market on the NYSE. It's actually the top
500 in the United States.
It's the top 500 publicly listed companies that are not listed on the United States Stock Exchange, but actually American, right?
Based in the United States.
Based in the United States, so headquartered in the United States.
The headquarters is in the United States, even though these companies do business all around the world.
Yeah,
they have to be in the U.S. to be in the S&P 500.
I see.
I gotta double check. I gotta double check that. But
no, you're probably right. So because I don't think there's. Well, I would be interested to see if there's any non-China, non-US companies in the S&P 500. You know what I mean? Like, and that makes sense, I think, because if you look at the big banks like HSBC, HSBC's in there, but it's a Chinese, it's a Hong Kong company. Barclays, those big European companies. I wonder if there's any of them. If there's not, makes sense. There you go. You don't know Bubba. I'm disappointed.
Yeah, it's the 500 largest companies that are U.S. based.
They have to have their headquarters there. There you go.
But the crazy thing is 30% of the revenue, 30% of the companies in the S&P 500, like the total revenue, it's international. So 70% of the revenue is U.S., 30% international. So you still have a lot of international money coming into the S&P, even though they're U.S.
Yeah. I'm just gonna finish with this because I got a jet. I gotta go get my passport.
By the way, you might be thinking BT. Maybe Baba's in BTI. It might
be because tech. Yeah.
Yeah.
Someone at the bottom. I just want to. This is a really important comment to make. Someone says Tesla looks juicy to me. I think there has to be in this group. If we're going to teach them on anything, I think that if something happens like a rout or a stock falls drastically, like Netflix or Tesla, whatever, it doesn't really matter what it is. What you got to ask yourself is what is the current intrinsic value of the future cash flows that this business can create, and how long can it create them before someone competes them away? And is it predictable? Because if it's not, it's just not a safe place to put your money. So I think unless you know how to value a stock based on future cash flows or growth stocks, and there's a formula for that, and you really thoroughly look into it, and you've read the annual report, and you've read into the company of EVs and the competitors and Mercedes-Benz and Porsche, unless you understand the competitive landscape and you've done the numbers and you understand the company and the valuation, you really have no business buying it. It's just you're just throwing darts at a dartboard, and that's why people in the group are freaking out when the stock market collapses, because they don't even know what they've bought. And if I didn't know what I'd bought and I started dropping, I'd shit my pants too. I'd be like, holy shit, I'm going to lose. You just don't know. But if you understand the fundamentals, when the stock falls, you can either confidently buy it or reluctantly sell it, but make decisions based on your fundamentals. And if you can't do that, if you don't know how to read a cash flow statement, income statement, or a balance sheet, and look at a competitive environment and think and spend hours and hours and hours of your time, you have no business buying individual companies. That's the reality. And if you are and you're winning, you're doing it from luck. If you're doing it from gut, it's luck. And one day your luck is going to catch up. It's going to run out and you're going to get completely decimated. So I would say the biggest lesson is if Tony, who, he understands economics and stocks, in fact, if he's going, you know what, I've resided to VU, and me on the other side going, fucking think I should have, and blah, blah, blah.
And me actually doing it.
Yeah, and Bill just the smartest doing it.
Yeah, I'm the smart one here. I'm the smart one for once. Yes.
Yeah, and I think as long as you understand that, doesn't mean you have to do it, but as long as you understand it, then I think we've done our job. Because these comments like it looks juicy, based on what? Where's the analysis? I'd love to see someone do a proper analysis and paragraph in the group or a Facebook Live saying, these are the reasons why. And after my 57 hours or 157 hours of research, this is what I feel. If you can do that, then you can say it looks juicy based on these reasons, right? But if you can't and you're just falling, no idea, speculation, stick with VU.
Yeah, I would say speculation era is over due to quantitative destruction or tightening, as people will call it. As we saw all the speculative stocks just completely falling off. The one thing I'll say about Tesla is I significantly doubted and talked so much shit about Tesla. And I looked at their balance sheet. I looked at the earning reports. I looked at the financial statements. I have to say, like, last year, I totally was like very down on Tesla. And since that time, they've literally beat earnings every single quarter. I don't know how they're doing it. I don't know how they're selling more and more cars.
But the rise in the stock, Tony, is not based on fundamentals.
It's still overvalued. It's still overvalued based on, like, if you're looking at like price to book, PE ratios, whatnot.
Yeah.
I mean, they're still like grossly overvalued. But it just makes no sense that this.
But you don't have to know. You don't have to be right in the first 5 years. You just have to be right. So, like, for example, when Tesla falls to $160 a share in the next few years, right? If that happens, falls back to the fundamentals, then you'll realize, shit, lucky I followed my analysis, because that's when it makes sense. It doesn't make sense in a flipping 2 or 3 year gap up that based on the fad of Elon Musk. Like, anyway, you know what I mean. I'm gonna get out. I've got a catchphrase we can use. I know there was a poll.
Wait, yeah,
ready?
I want to
bring
up that poll.
Yeah.
You ready to listen to this? If you don't know what to do, just buy VU.
You don't know what to do, just buy VU. Or is the juice worth the squeeze? Is the juice worth the squeeze? That's a good question.
I like if you don't know what to do, just buy VU. That's a good one. God, we got to get t-shirts.
Advertising.
Yeah, that's our t-shirts. Yeah, I'll go ahead and make a TeePublic thing.
All right, send me a shirt. I gotta send you a loaf of bread too. That's all I want to do.
Yeah, I'm waiting for the loaf of bread and that box that all your fans seem to be getting.
What's up with this bread? What are we talking about here? What kind of bread is this?
Australian bread's the best in the world, and I'm gonna send Phil some, and then maybe I'll send you some, Tony.
All right.
There we go. All right. So
when
in doubt, buy VU.
Yeah, when you don't know what to do, just buy VU.
That's awesome. Right.
I'll see you, man, later. Good to see you guys. Thanks.
Bye. Thanks, man.
Take care, buddy.
Bye.
That's great. I love that.
Oh, wait. Yeah, it looks like, unfortunately, Mark, you lost the time. It's not going, is the juice worth the squeeze? No, we're going, when you don't know what to do, buy
I like
VU.
Is the juice worth the squeeze too? Maybe we can open the show with one and then close the show with the other.
I think we should close with when you don't know what to do, buy VU. And open with is the juice worth the squeeze?
Yeah. The last thing I'll say to close out the show is to touch on Tesla. Their earnings are increasing, their revenue is increasing, they are selling more cars. Two things though is, one, they're still overvalued. Their stock price is still overvalued based on their intrinsic value of the company. And two, the stock is heavily dependent on Elon Musk. It really is. If he leaves the company or he sells his shares or he goes on to other endeavors, it seems like he's pretty distracted nowadays with other things. Maybe when he gets out of Tesla, you're going to see huge drops in the stock price.
This is what I think will happen since he's now like he's got SpaceX. So he was only had two companies really he was dealing with, SpaceX and Tesla. Then he got the boring company and he's like, okay, that's boring. I don't want to play with that anymore. I'll talk about it every once in a while. He's got Starlink and Starlink's pretty much taking care of itself. It's not necessary for him to be there because it's not that showy. Because Tesla and SpaceX are showy. They're showy businesses. Now that he has Twitter, Twitter's going to demand more of his time than the other two because the other two are self-running pretty much without his presence. So you're probably going to see and hear less of him, but he's going to be on Twitter, which will allow him to pump up the stock of both SpaceX and Tesla.
I think the other thing that's important is I think Elon Musk doesn't give a shit about the stock price. Not that he wants to change the world. Like he wants to win. He wants to do things. He wants to build companies. He wants to take companies from the ground and build them into something. And I think he gets joy out of that. I don't think he really cares too much about the stock price. The stock price is just a byproduct of success.
I think it's like once it hits a certain level of success, he's like, okay, I'm done. I'm bored. I want to go and play with something else. Like SpaceX, it's like he's like, okay, SpaceX is pretty much doing what I needed to do. Tesla is doing what it needs to do. I want to take Twitter to the next level, where I think it can be like in the in the metaverse or wherever he wants to take it. Because he's bored
taking
now.
Twitter private because he doesn't. He's already said in the past he wants to take Tesla private. He said that he's not even, he was thinking about transitioning out of Tesla, but he can't do it because he says they need him. He said he doesn't even really want to be, I feel like he doesn't even want to be in Tesla anymore.
No, because it achieved what it needs to. And he's like, okay, here's the 10-year plan. Just follow this fucking plan and you're good to go.
He overachieved more than he ever could have envisioned. He really did. Like, it's incredible what he did. So yeah, I just don't know. I don't know. I would never put a large chunk of money into Tesla. I really wouldn't. It's in VU. If you own VU, if you own QQQ, you have it already. And guess what? If Tesla does eventually drop to $100 a share, like Lloyd said, they'll just remove it from VU, and it won't. Whatever. I'll have a bad quarter. They'll remove it, and then we're back on. We're back going up in the staircase. And this is a great analogy I heard couple months ago. Is the stock market is like a staircase going up because it's real slow, takes some time, and then on the way down it's like an elevator. It comes down fast, it comes down rapidly and in a blink of an eye, but on the way up to build that 10%, it could take a whole year, and to lose 10%, it could take a day. Yeah. So you gotta always have that in the back of your mind when you're investing in a company. If you buy anything and it drops 10% in a day, what are you gonna do? That's a question I always ask myself now. Anything I buy, if it drops in a 10%, 20% in a day, am I gonna be able to sleep at night? And that's how I go into buying anything now. All of my investments, I always think of the worst case scenario. If VU falls 20% tomorrow, I'm going to buy more. I might put $5,000, $10,000 into it rather than freak out. Just like today, I bought more today. In fact, I was happy it dropped today. So that's how if you go into investing with that mindset, a lot of people in the group, you see it, Phil. A lot of people in the group are very nervous. They're down. Some people are down 60%. Their portfolios are down 60%. Like, that's insane to me. I just can't fathom being down that much. Like, especially when the market's only down 10, 13%, the main index. If you're down 60%, like, whatever you bought is probably a very poor investment. To be down, no good company falls that much. No really good company falls 60% in a couple months like that. So something to consider. It could happen, but it's very rare. It's very rare for that to happen.
Yeah.
So,
all right, Tony, we're coming to the end of the show. Let them know where they can find you and how they can support you.
Yeah, the Stock Bros podcast. You can support me by leaving a review on Apple or Spotify.
You've been getting some new
helpful.
reviews, by the way. I have you on Chartable, so I get all the updates because I want to stay in touch. And you've gotten some new reviews, and I want to thank those fans for doing that.
Yes, thank you so much. The reviews are so helpful. I think I have like, I don't know, almost 40 now. So thank you so much. And I just put out a bunch of new episodes, and I'll put the new ones in the podcast or in our
chat.
Yeah, I lost my train of thought. Yeah, in the chat.
It's late.
Yeah.
You have.
That's why you're here. That's why you're the guy to put us back on track. So
I'm the mogul. I stick with the podcast. I know everything, and plus you're drinking that beer, so it's fuzzling with your brain.
Yeah, I've had a couple.
I'm going to shout out
still getting
Lloyd.
over the cold. So
Getting over the cold. You're finally allowed to drink again. I'm going to shout out Lloyd's podcast. It's Money Grows on Trees, the #1 finance podcast for Australians and worldwide. You definitely want to listen to it because it will teach you how to become financially free through different tips and that. And he has weekly episodes as well. Check out his website, LloydJRoss.com, and you can check out his book there as well. I am, of course, Phil Better, the podcast mogul. I am the host, the moderator of this amazing show. You can check out my shows over at investinyourselfpod.com, where you can see 3 of my amazing shows, one of them which is an award-winning podcast. I want to thank you all for listening to Stock Dirty to Me, and remember, when you don't know what to do, just buy
Voo.
Voo.